Yeah. So shareholder wealth is maximum when MPS is maximum, and then yes, finally we say okay, everything remaining same. MPS would be maximum when EPS is maximum, right? So that's what we discussed yesterday. We solved one question, question number one, right? The idea was that basically we'll solve that question so that what we cover all the possibilities, right? Question had asked you to prove for EBIT of 70 and 80,000. But to make you understand the importance of indifference point, what we did, we added one more case. We took EBIT as 50,000 also and tried it out. Right, friends? So today we plan to start with the questions after that. So let's continue further. Okay, people are ready, I suppose. Hello everyone. Come on, come to screen, please. Good morning, people. Fine, let's start. Everything is all okay. Audible, visible. Okay, let's start. Ramya, stop your drawing skills. I can see the name of annotators. Always hold your horses for a moment. I share the screen. After that, I say disable. Bharat के इसको. Okay, people, let's start now. We're coming to question 2. Okay, so what's this question number 2? See, everyone there out, people. Very few people are with their videos on. Hello. Where are people? Where are people are there? Okay. Good morning. Good morning. Actually, good morning. So people are there. Good. Everybody out there listening to me. Hi. Today also 2 lectures, people. Okay, let's start there. Let's go with question number 2. Best of Luck Limited is a profit-making company. Guys, it has a paid-up capital of 100 lakh, consisting of 10 lakh ordinary shares of 10 each. See, it's a change in the question. Change in the question means what? The earlier question that we solved, okay, they were to finance a new proposal. So there was nothing existing, right? But what is this? What we would say, if this is what? This is existing capital, guys. existing capital. See, whichever plan you go for, this 10 lakh shares will be always with you, right? They're already with you. So in your capital structure, whatever capital structure you devise, you cannot avoid these shares. These are which shares? Existing shares, right? Currently, it is earning annual pre-tax profits of 60 lakh. Okay. Mark this as EBIT. Don't pop out of my screen. But I will tell him I will do that. EBIT. Now people are saying, sir, pre-tax profits are NPBT. My dear friends, it is having only equity share capital. So what will be that? Whatever you call NPBT or you call EBIT, both would be same, correct? Understand? Yeah. Company shares are listed and quoted in the range of 50 to 80. So, ITS, congratulations to Best Luck Limited, right? Their shares are quoted between 60 to 80. Hello, guys. Time pass information, right? Nothing to be done with this. They are just giving you gyan, general knowledge. Very good. Okay, fine. Very happy to hear. Okay. Management wants to diversify the production and has approved a project which will cost 50 lakh. Okay. See, guys, this is your new investment. Now, this is what you have to collect, right? 50 lakh is a new capital. New capital requirement. Okay. Which is expected to yield a pre-tax income of 40 lakh. Guys, now you need to tell me this 40 lakh. Again, I will consider as what? EBIT. This I'll consider as what? EBIT. Hope you all are marking. Right? You know what? I don't know the source. Okay, what I predict that I'm going to earn 40 lakh. Have I yet decided my source of financing? Tell me, have we yet finalized the source of financing? No. If the source of financing includes debt, then there will be some interest amount, right? So, though they say pre-tax profit, basically it is which profit? EBIT. Am I clear? Okay, let's go ahead. Options are under the following options are under consideration. Number one. So these are now different financing like plan. What issue equity share capital for the entire amount. So all 50 lakh to be collected by what? Issuing equity shares. It is expected that the new shares of face value 10 can be sold at a premium of 15. Guys, that means what will be the issue price? Yes, people. What will be the issue price? People are alive, no? Maybe she could write something in the chat box as well. Are you able to send it to me? Yes. I asked for issue price, guys. Issue price. Hello. Issue price. Mukil 15. Mad. हाँ. Rishabh. Array. Face value is how much? 10. Face value is 10. Smart. Smart. Add premium. Add. Do on your calculator. If you're not sure. How much? 2 pi, 20 pi, 2 pi, 20 pi. Array people are replying 15 ray early morning. Hang to death here. Seriously. $25 final no? Okay. So how much you have to collect? You have to collect. Okay. You have to collect 50 lakh, no? The new project is going to cost you 50 lakh. So one share will give you 25 rupees. So how many shares will you issue? Take your calci, switch it on first. Morning, no, early morning, switch it on first. Type 50 lakh. Type 50 lakh. Divide by 25. So 2 lakh. Correct, friends? 2 lakh shares. Very good. Very happy to see correct information in one first round. Thank you. Thank you guys for your valuable contribution. Sales minus variable cost contribution. Not that one, your contribution. To issue 16% non-convertible debentures of 100 each. Okay. So plan 1, equity. Plan 2, debentures. Plan 3, mix up. To issue equity capital for 25 lakh rupees. Oh. Face value 10 and 16% non-convertible debenture for the balance amount. Okay. Okay. This time, if you do, like if this mix you do, company sure that company can issue the shares at a premium of 40. Please don't post me wrong number. What will be the issue price? Ovia. Bhagwan. Uvan. From where do you come, people? Come from. Hello. Have you bored that you will give wrong answers? Commerce students. Array face value 10 rupees. Fear of God is there or not? Almighty is watching. Huh? Face value 10 rupees. Premium 40 rupees. When you give answer 65, 55, anybody staying close by, go and personally on my behalf kill these people. Face value 10, premium 40, and then you give me the answer 55. 5 rupees your own contribution. Huh? How much should be the issue price? 50, full and final. What happened to the people early morning? What's the day today? Sunday or what? I even don't know the day. Sunday. Okay. Saturday hangover. Huh? Good. So we finalize the issue price 10 plus 40, 50. People, seriously, people, you give me such bhayankar answers. You require to advise the management. You are advising management depending upon your advice. Company gone. As to how additional capital can be raised, keeping in mind that management wants to maximize the earning per share to maintain the goodwill, the company is paying income tax at 50%. Okay, so they're asking you out of these three options what we should select. Okay, and they will depend on you. First, you will calculate wrong issue price. Hello guys, issue price clear? No. Face value plus premium is what? Issue price. Okay, fine. So what is the first thing that you remember last question also? We prepared an income statement and reached up to where? Reached up to EPS. EPS will be the deciding factor which plan to select. Correct. But before doing that, what first we will prepare? We'll prepare the financing plans. You guys remember or you don't remember? You remember, na? Right now. Thank you, Bharat. Bharat is saying, I remember. Thank you, dear. So, see this, see this. We had prepared this now, income statement. Before that, we have prepared this capital structure. Like that, first we will prepare this capital structure. Okay. So, Chola, let us start. Sundar. Solution to classwork question 2. That's right. Capital structure, financing plans. Okay. How many financing plans we saw? 3 plans, right? A, so plans A, B, C. Just a moment. Opening my question 1 minute. So, 3 financial plans, right? How much is to be raised? Total what we discussed, 50 lakh is to be raised. Okay. So, what is the first plan? Equity share capital. Okay. Guys, we are writing this all in lakhs. Huh? Okay. We are not planning to keep adding the zeros. Okay. So, how much would you raise? 50 lakh. Simple. All 50 lakh through equity share capital. Okay. Plan A is like that. Let's talk about plan B. Let's talk about plan B. What is happening in plan B? It's all going to be 16% non-convertible debentures. 16% non-convertible debentures. Nothing over here. Directly 50 over here, nothing over here. Okay. What is happening in plan C? Issue equity capital for 25 lakh and issue 16% non-convertible debentures for 25 lakh. Hope you have understood this. Means in either of the case, what will be our total capital? Yeah, it will remain same. Total capital, whichever way it comes, would be 50 and 50 and 50 only. Correct? We have to raise 50 lakh. Now, whichever way we go, we have to raise how much? We have to raise 50 lakh. Okay. Now, you remember number of equity shares is what we write below this. Yes, that will write now also. Number of equity shares. But see now, one important change will happen over here. In the last question, it was everything new, guys. So we just took into consideration the new shares. Correct? Now tell me, this business is already existing? Yes or no? So whichever plan you go for plan A or B or C, existing shares will be there in every plan. Did you understand this, guys? Huh? Okay, fine. So I'm going to write existing. Somebody posted me a message. Yes, sir. 10. Correct. That is the correct answer. Yes, Bharat. Yeah. So 10, 10, 10. This will remain in every plan. This will remain in every plan. Okay. Let's add new shares. Okay. How we will calculate? We have already done the calculation orally. Still, we'll write over here. Yes, right. See, 50 lakh. Okay. Divided by 25. So don't do 50 lakh. Just write 50 divided by 25. You get 2. So 2 lakh new shares. It's already in lakhs, na guys. So 2 lakh new shares will issue. Here there is no question of issuing any new shares. Why? Because you're just going to use what? Debentures. And over here, acha, how did we get that? That also we should write now. 50 lakh on 25. What is this 25? 25 is the issue price. Correct, friends? Yeah. Acha, what will happen over here? See, I will raise 25 lakh, but divided by not 55. Look at the issue price, what we discussed. 50 rupees. 25 lakh divided by 50 rupees will give you 0.5. Is that right, people? Yeah, 50,000 shares is correct, Vishal, but we are basically doing in what? In lakhs, na? So that's why what we are doing, we are not saying, okay, let me say 25 lakh. I say just 25 and divided by 50, I get 0.5. So 0.5 lakh. Fine, understood the calculation of number of shares. Okay. So that is, this will be 12, should be 10, should be 10.5. Okay. So this calculation, guys, existing has got added over here. I hope everybody understands this. Okay. Now what, sir? Now nothing. We will prepare income statement. But before we prepare income statement, let's write over here. This will be old EBIT plus addition from what is the what you are going to input addition from new project, let's say. So what is the existing EBIT or old EBIT? 60 lakh. It's already there. And the new one is going to give you how much? 40 lakh. So total 100. Now we are good to go for the income statement. I'll have to shift to the next page. So let's make income statement. Three plans, no? Correct now? financing plans what? A, B, and C, right? 3 plans. So here also you write now. Lakhs. Okay. So let's start from EBIT. What we discussed is existing EBIT is how much, or the old EBIT is 60, and addition from new project is 40. So in any case, I'll start from what? 100. One possible doubt which I've sometimes faced. Guys, you understand this is A and B and C, or A or C, or A or B or C. This is and between, or between. Or between, right? Either what and. Sanya, you're going to do all the three things. Mad or what? There are some things you have to select in life which are not and. It's always or. You fill up some form. Okay. So you have to write married, unmarried, qualified, unqualified, student, professional, male, female. Either of the options. Or. So A or B or C, correct? Either of the three will happen. No. Right? So you're okay with this, that I've written 100 everywhere. Later on, people message me, sir, divided by 3, sir, 33.3, 33.3, 33. Hello, not three plans to go simultaneously. Either A or B or C, we have to select the best out of it. Fine. Less interest. Tell me, people, message me, people, which plan will have interest? Okay, I shifted over here. Plan B will have interest and plan C will have interest. Very good. Very good. I hope you understand that. Sir, at these two places, what has happened, sir? Yes, there are debentures, so we'll charge interest over here. Correct. Interest at the rate of 16%. So 50 into 16% give me 8 over here, and 25 into 16% give me 4 over here. Yes, very good. So this will be EBT. Correct, friends? So remember 100 only. So become 92. This becomes 96. EBT less what? Tax. Tax at the rate of, last line it is written 50%. Okay, fine. So 50, 46 right now. Yeah. And 48. Much people are calculating APS. Give me some time, guys. Little slow. So change earnings after tax, or NPAT as we call it. What we saying now? 50, 46, 48. Okay. Less what? Preference dividend. Do you have any preference capital in the whole story? No, sir. So this is nil. Okay. So by Payesh, same, no? 50, 46, 48. Right, people? And then below this, what would you do? You calculate what? EPS. So what we say about EPS, we say it is Payesh upon number of equity shares. So 50 divided by what we discussed, the number of equity shares over here, 12. Then 46 divided by 10 and 48 divided by 10.5. So 50 divided by 12 give me 4.1666. Now, so let me say 4.17 rupees per share. This is obviously now 46 is 4.6 rupees per share, and 48 divided by 10.5 gives me 4.57 rupees per share. I hope you got your answer, guys. Correct now? So we will go with which plan? We'll go with plan B. By plan B, EPS is maximum. That's what management is asking, right? You're required to advise the management house to raise the additional capital. So what we should say, any company's name is given, yeah, best of luck limited. So right below. Best of luck limited should select plan B. Yes. Why? Since what? We have no other personal reasons. Since what? EPS is maximum. But that's the only reason, guys. No other reason. Cholo, people, tell me, did you understand this? Good. Haripriya joined late or what? No, did not see you in the beginning. Pennarasi, good morning. Is also there. Very good. Okay, people, hope you are done. I say, okay, people. This is okay, Google. It starts with voice recognition. Oh my God. Let's go on. Let's move to the easy now. People, easy understood. Okay, fine. Keep in mind and select that plan where EPS is maximum. Okay, but the ultimate aim is what? Maximization of MPS. Right? We always assume other things being constant, what MPS will be maximum and what EPS would be maximum. Okay, fine. Let's go ahead. Let's come to question number 3. Every one of us. Let's come to question number 3. Shaji Steels Limited requires 25 lakh for the new plant, guys. He requires 25 lakh for the new plant. Unlike question number 2. Question number 2, existing data was also given. Let's read. The plant is expected to yield EBIT of 5 lakhs. Such a clear wording, right? You getting me? People? New investment is how much? 25 lakh. New investment is how much? 25 lakh. And this new plant will give a EBIT of how much? 5 lakh. Simple. Right? Okay. Let's continue reading. While deciding about the financial plan, company considers objective of maximizing earning per share. Hello, people. This paragraph is what? Grand info. Tell me, even if this line was not there, you will prepare whatever financial plans. You'll select the plan with highest EPS only. So see, don't get confused by such words. Okay, sir, we know we're going to go with the highest EPS. That's it. Okay. It has three alternatives to finance the project. What are those three alternatives? Let's see. By raising debt of 250. Okay, how much is the finance required, guys? Let me remind you. The finance required is 25 lakh. Okay. And then raising debt of 250. So what about the balance? What do you think? Is it on a roadside? Yeah, no, no. Let's read the whole thing. Or option is option. Okay. Or debt of 10 lakh. Or debt of 15 lakh. Right? So in every case, sir, he is raising less than the required from the debt. We know further what is told further. In each case, by issuing equity shares, the balance, what it means in the whatever is a plan, guys, whatever is required after taking debt, the balance will come from where? The balance will come from issuing what? Equity shares. Is the information clear to everyone? Okay, okay, fine. The company share is currently selling at 150. Okay, guys, what is this company share currently selling at 150? What is this 150? This 150 is current MPS. Issue. What is that? Issue price. Hello? You understand issue? Last question you have to calculate face value plus market. You know what? When institute saw what you do with face value plus security premium, they thought of giving you direct issue price. You add wonderful and give wonderful answers. Share face value 10 rupees. Security premium 40 rupees. You give me the answer 55, 60, 65. So listen, let us directly give them issue price. So what is the issue price? In general, the issue price is told to be how much? 150. Okay, fine. But it is expected to decline to rupees 125 in case you borrow funds in excess of 10 lakh. Oh, that means this will become 125. So this will become how much? 125 in case the funding exceed borrowing exceed how much? 10 lakh. When this is happening, see this case. So I will connect not this 125 with everything, but only with this 15 lakh. So in this plan, right? In this plan where you borrow so much, right, friends? Where you borrow so much, 15 lakh, above 10 lakh you borrow, that plan only, the market price will become how much? Yes, Darshan, correct. In plan 3, the market price will become 125. Okay. Funds, okay, now see. Now you guys have to remember what I told you. As you borrow more and more, risk from the point of view of lender increases. Hello? Suppose I'm the bank, right? People borrow 1 lakh from me, people borrow 1 crore from me, people borrow 10 crore from me. I get little tense as people borrow more. So what is a normal tendency? Borrow more, the rate of interest increases. So see, what are the brackets created by the bank? The funds can be borrowed at 10%. At 10% up to how much? 250. Okay. Then 15% over 250, but up to how much? Up to 10 lakh. Right? And then 20% over 10 lakh. So how many brackets are created, guys? How many brackets are created? 3 brackets are created, right? Is that clear? Okay. So the tax rate applicable to the company is how much? 50%. Which form of financing should the company choose? Okay, fine. Understand, very simple it is. Only thing is what you should clearly, okay, which form of financing would you choose? Tell me. It depends upon what? EPS, we will make an income statement, correct? We'll make an income statement and we will reach at EPS. Then which form of financing will we select? Simple. Where what? EPS is maximum. Is that right, people? Understood? Okay, we will discuss no how to calculate that financing, how to present that. That we will do. But you understand the basic. The question always asks which form of financing to select. We have a simple reason. Calculate EPS, estimate the EPS, select the plan with the highest EPS. That's it. Okay, fine. Let's move on. Yes, maximum EPS. Solution to transfer question 3. First, what we will discuss. First, we will discuss financing plans. Okay. So, how many plans we have? We have 3 plans. Correct. Plan 1, plan 2, plan 3. Okay. Okay. So, let's write like this. That you are going to issue debt. Wait a minute. See how I write it. But in debt, there are 3 slots. If you borrow up to 250, there is one rate of interest. If you borrow between 250 to 10 lakh, means above 250, 7 lakh 50,000. The rate of interest is different. And if you borrow anything above that, then again the rate of interest is different. Correct, people? Okay. So I will just mention over here how much is our total requirement. Total requirement is 25 lakh. Okay. What we plan to do, guys? See, we plan to take a date of 2 lakh 50 in the first plan, 10 lakh in the second plan, and 15 lakh in the third plan. Okay. What we have seen, we are going to have 3 types of debt. 10% debt up to 250. Between 250 to 10 lakh, it's going to be 15% debt. And if you borrow anything above 10 lakh, then you will be facing how much percent rate of interest? 20% rate of interest. Okay. And then the total of this, whichever way I go, the total of this is going to be how much? In plan 1, the total debt is going to be 2 lakh 50. Okay. In plan 2, the total debt is going to be 10 lakh. Whichever rate of interest it comes, that we will gradually discuss. And in plan 3, the total debt is going to be 15 lakh. Okay. Yeah, but we know that it's not only about total debt. Along with that, there is going to be some equity. Correct, friends? plus equity also will give us our total capital. See, we know in any case how much we have to raise from the market. We have to raise 25 lakh. We have to raise how much? 25 lakh. Correct, friends? So now, how I would get these amounts? Balancing figures, as simple as that, right? So, balancing figure over here, balancing figure over here, balancing figure over here. How much it should come to people? This will come to 22 lakh 50,000. This will come to 15 lakh. This will come to 10 lakh. Right? Hello, guys. You've understood what I have written till now? Absolutely clear? Okay. Now, these three debts, no, I'll be very clear with these three debts also. I'd say up to 2 lakh 50, this is the interest rate. Okay. If I borrow anything between 250 to 10 lakh, right? And above 10 lakh, this is the interest rate. Correct, friends? Now see, in the first plan, guys, in the first plan, how much is our total debt? 250, correct? 250, yes. So it will fall under which bracket? The first one, the second one, or the third one? First one, first bracket, 10% interest. Understand? Right? Okay, good. So write this 250 over here. In the first plan, no need to take 15% debt, no need to take 20% debt. Okay. In the second plan now, total amount required is 10 lakh, right? Total amount required is 10 lakh. So in the first bracket, I can raise 2,50,000 maximum, correct? After, okay, so that 2,50,000 will come by 10%. Hello? The 2,50,000 will come by how much percent? 10%. Everybody agrees on this, right? Okay. So let me write over here 2,50,000. How much additional I need? 7,50,000, guys. Additional I need 7,50,000. Will that 7,50,000 properly fit in the second category of loan? Understood that? Okay. So we need not cross over to the third category. Okay. So 750 over here. So this is done. Okay. Now I need a loan of 15 lakh. Now I need a loan of 15 lakh. How this would be divided? First 250 would come at 10% rate of interest. Okay. Up to 10 lakh is 15% later. 250 to 10 lakh. Because additional 750 would come at 15% debt. So 250 by 10%, 750 by 15%. 10 lakh done. Still 5 lakh left. Okay, fine. So that will come at what rate? 20%. Come on, people, tell me, did you understand this classification? Absolutely clear to everyone? Okay. Thank you, people. People are already done. Krishna Prasad, Someshwar, ready with the final answer. Great going, guys. Only thing is that, good. So people have already selected plan B. Someshwar? Acha, Rama is also done. Rama, done. Solved total. Smart people. I seem to be very slow. Okay. Guys, don't forget to write below this number of equity shares. Don't forget to write below this number of equity shares. So how would you calculate that? 22,50,000 is what you need, divided by the issue price. Issue. So how much is the issue price over here? Issue price over here is 150. Correct? Market price 150 only, no? Yeah. So 22,50,000 divided by 150. It came to 15,000 shares. Okay. Here we are needing 15 lakh rupees. And the market price will continue to be same, 150. Correct? So 15 at 10,000. Still we do. Calci we should use now. 10,000 shares. Okay. Here we need 10 lakh rupees divided by how much? Same. 150? No. 125. Right. Because you're borrowing more than. This is given in the question. No. If you borrow in excess of 10 lakh, the market price will come down to how much? 125. People are surprised. Huh? When did this happen, sir? We were sleeping, sir. See, we have written over here 125. If you borrow more than 10 lakh, no. So this is the case. We are borrowing more than 10 lakh. You're borrowing 15 lakh. So divide this by 125. Market price 10 lakh by 125. 8,000 shares. Okay, guys, you're all set to solve this now. Okay, come on, let's make a income statement. Three plans, no? Yeah. Plans 1, 2, 3. Okay. Let's start from EBIT. EBIT in any case would be how much? 5 lakh. Okay. Let's what, guys? Interest. See, remember the financing plans, the way we made them, right? How many types of debts are there? Three types: 10% debt, 15% debt, and 20% debt. I just suggest you that don't try to mix up everything, right? Separately, right? Separately. Interest, underline that. And like 10% debt, it will become more easy rather. 15% debt and 20% debt. Correct? See, 10% debt of 2,50,000 is everywhere. So 10% of that would be 25,000. So I'll write over here less 25,000. See, botheration gets reduced in fact. So 25,000 will come in all three plans. Okay, fine. Then look for 15% debt. 15% debt, 7,50,000 into 15% is 1,12,500. But in which plan it will come? It will come correct in plan number 2 and plan number 3. So write accordingly. 1,12,500. 1,12,500. Okay. Debt 20%. 20% debt is only in the last plan. So it will not come here, it will not come here. 20% of 5 lakh, 1 lakh. Okay, so we are good to go. So now we can write EBT, earnings before tax. So this would be 475, 5 lakh minus 5,000 minus 4. So 500 less tax. How much is the tax rate? 50%? Two 37,500. So earnings after tax, or you can say what? MP 80. 237,500. 181, 250. 131, 250. Less preference dividend. Anyways, it's not there in any of the plans. So get Payesh has the same number, 237,500, 181, 250, 131, 250. Okay. So our task is simple now. Just calculate EPS, guys. EPS is what? Payesh, profits available for equity shareholders, divided by number of equity shares. Okay. So 237,500 upon what we discussed over here. Number of equity shares 15,000. So that comes to 37,500 divided by 15,000. 15.83 rupees per share. Correct, friends? Okay. 181, 250 divided by how many shares was it? 10,000? Yeah, 10,000. So 18.125. So we can say 18.13 rupees per share. And here it is 131,250 divided by 8,000. Correct? So 131 divided by 16.406. Now, so let's make it 41. Right? So you will have our answer. See, if the company's name is there, now people prefer to give conclusion with the name of the company. So, what is our conclusion? Shahaji Steels Limited. Okay, should select plan 2. since EPS is maximum at 18.13 rupees per share. Done? So make sure if you have to ask anything, put it in the chat box. You're good at typing. You can actually write 300 words essay. It's planning. People got these answers. Let him write. Let him write. Till the time you tell me. Have you understood these calculations? Now, prototype is happening, right? Similar things are happening. Correct? I'll just reduce it a little so that you can see the whole solution. Other people. Oh, Someshwar, where are you? Tired of typing? Acha, okay, here. Okay, great. See, Someshwar, I have told you earlier also. The standard tells you something. If you don't follow, will you be hanged to death? No. You have your answer. Huh? Correct, na? You are saying that in accounting ratio we learned standard should be 2:2. But third plan hasn't reached. So how come second plan is good? You go and find out in the market. There are big multi-crore companies floating their shares and they don't even issue 1 rupee of debt. It's very normal. Ideally, one should do like that. But if one says, no, I will not do like that. Right? See, what we are always told. Okay, Rahul. Whether higher EPS is a benefit for shareholder or company, decide. You people only tell. Higher EPS is a benefit for whom? It's for both, not just shareholder. Why? Win-win situation. Win-win situation, no. Both shareholder will be happy. Why? Because EPS is maximum, wealth is maximum, MPS is maximum. So then why the hell the company should be happy? Array, my dear friends, you see the stock market, companies like Reliance, they come up with additional issue of shares. 9:15, the share issue opens. Next 10 seconds, it gets oversubscribed. People from all over the world jump on that share. Right? Array, my dear friends, please don't put the probabilities over here. Mr. Akash, sir, in plan 2, can we take 10 lakh in 15% debt? It is not as per your choice. Please see that's being the difference now, guys. People don't read only the question. What to do? See, it is written over here. Array, I have not taken as per my wish. It is written. Please read the day you read the question. You know, from day one, I always say, read the question carefully. Don't get diverted during that time. Don't think something else during that time, something else about somebody else. No, stay focused. It's return. Funds can be borrowed at the rate of 10% up to 2 lakh 50. How can you borrow 10? How can you borrow? How can you set your own limits? You have to follow the question, guys. You have to follow the question. Whatever you feel like writing, you write here. In plan 2, can we take 10 lakh in 15% and 2 lakh 50 in 20%? What is this? And the slabs are given that up to 2 lakh 50, 10% interest. Anything between, whichever plan you go, man, you don't understand this for questions. Don't check my patience here. Come on. Read the condition. Read the conditions of the question. Please, neither you nor me, none of us will decide what is to be solved. It's a question to be deciding factor. What is written in question? Up to 2 lakh 50, 10%. Between 2 lakh 50 to 10 lakh 15%. So how can we take 10 lakh in 15%? Nobody will give you. It is written in the question. Between 0 to 250, 10%. Between 250 to 10 lakh. Between 250 to 10 lakh. Oh my dear friend, not all 10 lakh. Between 250 to 10 lakh means the next 7.5 lakh. So unfortunate. I don't read the question. I wish you could read the question more carefully, guys. Please, please stay focused. I write so much here. I write so much. 10% up to 250. Up to 250. What do you understand? Up to 250 means up to 250, na? Not more. I cannot explain in any other language. Up to 250 is maximum 250. You can take up to like slabs, yes. And if you don't take one big slab and put it, difficult to explain here. Come on, let's go with the next question. Hope that helps. Question condition is given and you people imagine on your own here. Stop. Let's come to next. Come to question number 4. Ganesha Limited is setting up a project with a capital outlay of how much? 60 lakh. So they need how much money? 60 lakh, right? It has two alternatives in financing the project. Okay. What is that? Alternative 1, 100% equity finance by issue of shares of rupees 10 each. Okay, guys, read the whole question, then come to conclusion. Alternative 2, debt equity ratio 2:1 by issuing equity shares of 10 each. Okay, fine. So this all 60 lakh, you'll use what? Equity shares. Here you'll do debt is to equity 2:1. Means what will happen? Debt would be 40 and equity would be what? 20. Right, people? That much you'll understand. Yes. Then calculate the interest payable on, the rate of interest on debt is how much? 18% per annum. Corporate tax rate is also given. Okay, what are you asked to do? You're asked to calculate what? Indifference point. Okay, remember na? Indifference point. What happens at indifference point, guys? EPS of both the plans is same, right? EPS of plan 1 is equal to EPS of plan 2. And that is what is being asked to you, that what will be the EPS remains same. Okay, yes. Fine. So let's do that. Those who want to see the whole question. I am writing. Okay, so let's start with solution to classwork question 4. I'll still strongly recommend to you guys write the capital structure. Okay, sir. No EPS not to be calculated, sir. So why, sir? Arey, wow, people are done. People have calculated the difference. Good. People, if you're done with the indifference point now, in the rough you verify. No question is asking for verification. No. Question is not asking. But you can try it in the rough now. What do you have to do for verification? Whatever indifference point you have got now, take that as an ABIT and solve and check whether EPS is coming same or not. It's like feel like got it correct. So I'm not very sure those people who are done with their answer, they have written financing plans or not. Plan, what is that? Plan 1, okay, not plan A. Plan 1, plan 2. Okay. What happens in plan 1? It's all equity. 60 lakh. Okay. What happens in plan 2? 18% debt. 40 lakh. Correct. And equity would be 20 lakh. Correct. This is how you have raised okay. So you plan to raise total capital. Okay. And then as usual, just write number of equity shares. Okay. So what is okay guys, tell me, is the issue price given separately? No, issue price is not given separately. So we'll take face value itself as what? Our issue price. So here it will be 6 lakh number of shares. Correct. And here it will be 2 lakh number of shares. How did we get it? 60 lakh divided by 10 and 20 lakh divided by 10. Number of shares calculation, I hope, is clear to everyone. Okay. So let's do calculation of indifference point. Okay, let's start with it. So we'll say EPS is same now, good, very good. At indifference point, OMA, EPS 1 to EPS 2. Then you have to write that EBIT minus I into bracket 1 minus T minus preference dividend upon number of equity shares 1 is equal to EBIT minus I 1 minus T minus preference dividend upon number of equity shares 2. Okay. EBIT is what we have to find, guys, right? In the first plan, debt is not there, so interest would be nil. Preference dividend is as such nil. So I'll say EBIT into, okay, what is the tax rate given in the question? 40%, 1 minus 0.4 upon number of shares over here, 6 lakhs is equal to, again, see, yeah, interest would be over here, right? EBIT minus 18% of 40 lakh. So 7,20,000. Yes. EBIT minus 720. Okay. 1 minus 0.5. Reference dividend will be nil over here, right? Okay. Divided by how much? 2 lakh. See, likewise, we can cancel this also now. 0.6, 0.6. Right? So what will happen now because of this? 2 1s are 2, 2 3s are 6. Okay. Yeah, 10,80,000 people are getting, smart people. So what we will write? EBIT is equal to 3 times EBIT minus 720. I have not yet opened the bracket ray. I just shifted. Shifta. So EBIT is equal to 3 EBIT minus 720 into how much? 2160. Therefore, EBIT minus 3 EBIT is equal to minus 21 lakh 60,000. 3 guys, EBIT minus 3 EBIT will give you minus 2 EBIT is equal to minus 21 lakh 60,000. Remove the minus sign. Therefore, 2 EBIT is equal to 21 lakh 60,000. Therefore, EBIT is equal to how much? 21,652 is 10 lakh 80. Okay, right. Therefore, indifference level of EBIT, comma, at which EPS is same, again a comma, is 10 lakh 80,000. EPS came same now. I'm not singing song. Where am I singing song? Re? Someshwar. I'm solving now. You got the same answer. That is important. While solving, na, so then, I'm not singing anything out of. See, I'm singing academic song. That's it. That is allowed. I'm not deviated from the subject. Got the EPS, no good. See, question is not asked for verification. See, if question asks for verification, then we will make it official. We prepare an income statement and solve. right? As we did in question number 1, right? Have they asked for a verification? It's like, no need of verification. So fine, it's okay. Just solve. In case like you want to check, you can check. No, otherwise it's fine. Okay, so yeah, let's go to the next question. Next question. Come to question number 5. Yes, you got the same EPS number, 1.08. Okay, guys, let's move to the next question. Start. Question number 5. Ganpati Limited is considering 3 financing plans. Okay. The key information is as follows. Total investment needed is how much, guys? 2 lakh rupees. Oh my god. For 2 lakh rupees, is making 3 financing plans. Okay. Wonderful. You all know that. That's how our questions are. Okay. Okay, so the plan A, what is happening in plan A, guys? Plan A, it's all 100% equity. Okay, great. So plan B is 50% equity, 50% debt. And plan C, what is happening in plan C? Plan C is 50% equity and 50% preference shares. Okay. Cost of debt means the rate of interest. Cost of preference shares is the rate of preference dividend. Tax rate being given to you. Okay, guys. One more time, one more chance you are getting to prove yourselves. Okay. Those people have given me terrible answers for issue price, and I've got some amount of thrashing from me. Okay. In the sweet quoted words. Okay. So please give correct answers. Equity shares of face value 10 rupees will be issued at a premium of 10 per share. So guys, very important question there. Therefore, issue price is equal to face value plus premium is equal to 10 plus 10. How much? 25, 30. Oh, everybody is giving correct answer. Wow, wow, wow. 20 only. Wow, wow. Ah, oh, super. Too much, sir, too much. I know. But you do too much. You add 10 and 40 and like 55, 65. So I will also do a little much. Expected EBIT is 80,000. Such a sweet people. Okay. Hmm. You're required to determine what? EPS. Guys, to determine EPS, what you have to do? Income statement you have to make. Income statement you have to make. Okay. First, listen. First, proper financing plans. Correct? Na? 3 plans, plan 1, plan 2, plan 3. ABC, whatever they are saying. Okay, do that. Then solve anything else. Okay, so let's start. I have shown the solution. Move ahead. Solution to classwork question number 5. Okay. First thing, guys, first thing first, financing plans. Plans, let's write about the plans. Plans A, B, C. How is that happening? Equity all 2 lakhs, 100%. 2 lakhs. What is happening in plan B? Equity is 50%, so 1 lakh, no? What about the rest of the money? 8% debt. 8% debt. True. 1 lakh. Okay. What is happening in plan C? Again, 50% equity. Okay, fine. So equity is 1 lakh, but no debt. Preferentials. 8% preferentials. And that's how you raise your money. Okay. Guys, as usual, below this, right, number of equity shares. What's going to be the issue price? We finalize, right? 20 rupees. Okay, so right over here. Issue price 10 plus 10, that is 20 rupees. So all 2 lakh divided by 20. How much? 10,000, sir. Wait, here it will be 1 lakh only, no? Equity capital divided by 20. So 5,000. And same over here. Done. What to make now? Income statement. That's what you'll ask now. First, what you do, you calculate EPS. For that, you'll have to make one income statement. One minute. People done with EPS? Okay, I'm writing. Replied with all the values. Good. I'm seeing your answers. Ganesh has got some different set of answers, dear. Let me calculate. Yeah. So this is plan A, B, C. Okay. You started with EBIT of 80,000. Correct. Less interest. Now we need to decide where the interest will come. So interest will not come in plan A, but in plan B. How much? 8% of 1 lakh. That is 8,000. Only one plan the interest comes. Correct, people? Then EBT 80,000, 72,000, 80,000. Less what? Tax. What is the tax rate given in the question? Tax rate given in the question is 50%. So 40,000, 36,000, 40,000. Then earnings after tax or NPAT, whatever you call it. 40,000, 36,000, 40,000. Less what? Preference dividend at 8%. And then we know we have preference capital in plan C. Correct? Nowhere else. This is how much? 8,000. So you will get Payesh over here as 40,000, 36,000, 32,000. And then you can calculate EPS as what? Payesh upon number of equity shares. So 40,000 upon what is the number of equity shares? 10,000. rupees 4 per share. 36,000 divided by how much? 5,000. 7.2 rupees per share. And 32,000 divided by 5,000. 6.4 rupees per share. Okay, that is done, people. So this is the best, but see, guys, hello, you are required to determine the EPS. Right? You're not been asked to make a decision. So just do what management tells you. You determine EPS for each plan. Done. Hello, now people confirm me. Everybody is getting the same answer. Absolutely. Very good. Good. Sure, guys. Great. That's a good news. And you are getting same answers. Okay. So let's come to second part of this. Determine what? Part number 2. Determine financial break-even point. Okay. Super. Calculated already. Plus 0, 8,000 and 16,000. Ramakrishnan calculated, Someshwar calculated, OVR, Naveen. Good people. Let's do that. So for plan A, we would say FBP is equal to what? I plus PD upon 1 minus T. Plan 1 is all equity. So interest is nil, preference dividend is nil. So FBP is nil. Okay. Plan B, FBP is equal to I plus PD upon 1 minus T. Plan 2 is all about, means plan B is all about interest of 8,000. There is no preference dividend. So this is 8,000. Plan C, FBP is equal to I plus PD upon 1 minus T. Okay. Interest is nil, but preference dividend is how much? 8,000. Divided by 1 minus 0.5. That comes to 0 plus 16,000. That is 16,000. Hope you all get these answers. Yes. Nil, 8,000. Yes, Akid, I saw your answer. And Mukilan also, I saw your answer. OVR, Someshwar, I saw your answers. Good. So we are done till here. Okay. This part is done. This part is done. Now what is asked? See what is asked in question. Indicates if any of the plant dominate and compute the EBIT range among the plants for what? Indifference. Let me take you to the question. See, earning per share we are done. Financial break-even we are done. Indicate if any of the plants dominate. When we will comment about this, we'll comment about this after calculating indifference point. Compute EBIT range among the plants for what? Indifference. Guys, what is the meaning of this statement? Compute EBIT range among the plants for indifference. This statement only means what? Calculate indifference point. Calculate what? Indifference point. Perfect. Sir, problem to us is that indifference point is calculated amongst how many plants at a time? 2 plants at a time. Right, people? Indifference point is always calculated among how many plants at a time? 2 plants. But sir, here we have three plans. Now what to do? We have all the time in the world, right? What we will do? We'll take everything separate, separate. Correct? A with B, B with C, A with C. How many times the calculation to be done? Three times. Super idea, no? That is the only. Hello, people. That is the only way out. Otherwise, how will you compare? Otherwise, how will you compare? Correct? Okay. So let's start then. Let's start. Okay. Should I leave this for you people? I'm not leaving means right now. Right now, I will solve at the end. Should I give you some time to solve? Right. So for each plan, 3 minutes. So total 9 minutes. Okay, your time starts now. Go ahead, guys. Go ahead. I'm reading your answers. I'm reading your answers. I'm solving. Okay, let's start. Let's check our answers. First, I'm doing for plan A and B. Okay, I think plan A has no interest, right? Correct. Plan B has an interest of 8,000. Plan C has a preference. So once we remember, then again and again we need not go there. And number of shares are 10,000, 5,000, 5,000. Okay. So EBIT. This would be null. This would be null. So I will directly say EBIT. Let's say tax rate. Tax rate is how much? 50%. Yes. Tax rate is 50%. So I would say 1 minus 0.5 upon number of equity shares 10,000 is equal to, over here it would be EBIT minus 8,000, 1 minus 0.5. Again, preference dividend is not in plan B, it's in plan C, upon 5,000. So this would get cancelled. So what you will get? Okay, yeah, this is 2. This is 1. So EBIT is equal to 2 times of EBIT minus 8,000. You open the bracket, you get EBIT is equal to 2 EBIT minus 16,000, right, friends? So you solve this, EBIT minus 2 times of EBIT, so minus 16,000. So you get minus EBIT is equal to minus 16,000. So EBIT is equal to 16,000. I hope you all got this value. Plan A and B. You have got these value. Okay, that is great. Fine. Let's continue. This is what we talked about, plan A and B. Now, so let's talk about plan B and C. So what we'll say, at indifference point, EPS of B will be equal to EPS of C. Okay, B is the one with interest, C is the one with preference. Accordingly, we can easily write actually. So EBIT minus I 1 minus T minus preference dividend upon number of equity shares of B is equal to EBIT minus I 1 minus T minus preference dividend upon number of equity shares C. Fine. So EBIT minus 8,000. 1 minus 0.5. Preference dividend is nil. Okay. Upon number of equity shares 5,000. Correct, friends? Is equal to EBIT. Interest is nil over here. So just keep EBIT 1 minus 0.5 minus preference dividend. How much? 8,000 upon number of equity shares over here also how much? 5,000. So this will be cancelled only. So what are we going to get? We are going to get EBIT minus 8,000 into 0.5 is equal to 0.5 EBIT. Correct now? Minus 8,000. Okay, let us solve. So 0.5 EBIT minus 4,000. Correct now? 8,000 to 0.5 is equal to 0.5 EBIT minus 8,000. Wow, wonderful. What is happening, guys? We shift it over here. So 0.5 EBIT minus 0.5 EBIT is equal to 4,000 minus 8,000. So this gone totally. So 0 is equal to minus 4,000. Oh my God. Super maths. Discovery today. Finally, we have discovered something following all mathematics rules. Yes, we can now apply for some kind of Nobel in the maths or at least some Padma Bhushan, Padma Vibhushan, Bharat Shri, whatever. What you're really thinking that this is what is we are done? Achievement. No. What does it mean? See, there are two meanings to this. Meaning number one, our calculation is wrong. Right? Meaning number two, indifference point doesn't exist. Check our all calculations. Calculations are perfect. You check all the calculations. Calculations are perfect. If calculations are perfect, what does it mean? It means that indifference point doesn't exist. Okay. So we write, but this is not possible. If you like not convinced, you can write in the bracket. For ordinary mathematicians, we have some extraordinary mathematicians that they can prove this also. Leave aside. But for ordinary mathematicians like you and me, people following mathematics, okay, fine. This is not possible. We don't have that. We don't have that efficiency to prove this. Therefore, what? Therefore, indifference point doesn't exist between what? Plan B and C. You know what happens? This becomes a surprise package for us. We were under the impression that we will solve and we'll get EBIT, or rather an indifference point. We were like, after solving 4-5 questions, we were like, okay, whenever we will put the things, we'll always get one what? Indifference point, at which EPS of both plans will be same. That doesn't happen so, guys. That doesn't happen so. Not necessary. Why, sir? There is a lot of implication to it. Okay. Let's do one thing. Let's complete. We are done with A, B, B, C. So let's do AC also. Then we will talk about it. See, we are done with plan A and B, done with plan B and C. So let's do for we'll say at indifference point, comma, EPS A, EPS C. Correct. Right, you're over. That is the best way to do. EBIT minus I 1 minus T minus PD upon number of equity shares. Again, EBIT minus I minus T minus PD upon number of equity shares. Okay, first plan is only equity, and plan C is about preference. So accordingly, we can quickly fill it up. Interest won't be there, preference dividend won't be there. So EBIT into 1 minus 0.5 upon number of shares 10,000. Okay, this is plan C. So interest is not there. So EBIT into 1 minus 0.5. Yeah, but preference dividend is there, guys. 8,000 upon number of shares 5,000. Cross multiply. So 0.5 EBIT is equal to 2 times of 0.5 EBIT minus 8,000. EBIT into 1 minus 0.5. 0.5 EBIT, 8,000 as it is, then everything multiplied by 2. So 0.5 EBIT is equal to EBIT, no? 2 into 0.5, 1 na people, minus 16,000. Shift it over here. 0.5 EBIT minus EBIT. So minus 16,000. Minus 0.5 EBIT to minus 16,000. So finally, EBIT would be how much? 16,000 upon 0.5. Check what it comes. Divided by 0.5. I do it on calculator. What's your answer for the last one? 32, 32. Wait now, wait. People who are in a rush to write the things. No, I told you. You remember yesterday I told you this point. Okay, that a common mistake. I sound stupid when I go on solving like this. Huh? Really, I sound stupid when I go on solving like this. But the people who are in a rush to go somewhere, I don't know where they have to go. Calculate this as 8,000. This comes 32,000. Correct now, people? Yes, this comes 32,000. But the people who feel that institute is going to give them a gold medal if they first calculate the things. I have seen some answers with 8,000 over there. That's what happens, dear. That's what happens. Don't see, here I am sitting in front of you, okay, to give you sugar coated taunts. Okay. Who will tell you all this in exam? You tell me. No one. And see, these questions are not like balance sheet questions where they get tallied and like unless you commit a total mistake, right? Suppose you ignore one asset, you know now final account, suppose you are solving and you forget reading one adjustment, okay? Depreciation analysis, you forget. So you lose one debit effect, you lose one credit effect. So it tallies. That's an extreme thing. That's an extreme thing. Generally, what happens, you forget one effect. But see here, whatever you forget, you will have your answer. It should be wrong, but you will have your answer. Okay, so please avoid this kind of mistakes. So this is the whole story starting from here. So I'll first put this in front, like people want to take screenshot. Yes, yes. After this, we will take some break. I understand. You worked a lot today. You deserve a break. Here's of the time you message so much. But when I say this, nobody messaged me. Okay, sir, you have also worked a lot. You also deserve. Thank you. Don't message. I know. Are people taking screenshot? Take the screenshot. No conclusions to be written, only one thing to be discussed. What is asked in the question, calculate EPS. So we calculated EPS. Calculate financial break-even point. So we calculated. No conclusion is asked. Indicate if any of the plans dominate and compute EBIT. So what they asked us to calculate? They asked us to calculate indifference points. We have calculated indifference point. What is only thing left? That for any plan dominate, right? Okay. So that we have to still write. Only that part we are left with. That I'm going to discuss now. Before that, let's take some 2-3 minutes break and then we will resume. Is that clear to you guys? Hi people. Okay. So now see what we have to discuss. We have to discuss which plan dominates. Right? Shall we? Everyone there? Hmm? Okay. So let's start. See, friends, what we concluded that indifference point doesn't. Anyways, we have selected the best plan. Means in case we have to select, we'll select which plan? Plan B one, right? Okay. How it dominates and why it dominates. That's an important thing to be discussed. Huh? Everybody is there out there. Huh? Just that the Zoom is on, they're roaming somewhere. They are to still to finalize on their breakfast activity. Hello, Taruni. I saw. Thank you. Ah, yes, yes. We need to discuss this point. See, show some, throw some light on this topic a little more. Okay. So, see, fine. We are done with our selection. That if EBIT is 80,000, fine. We are going with which plan? We are going with plan B, sir, because it is having a better EPS, and that we told you, but you said no, 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 no decision making, sir. Correct. Okay. Now, but why so? Why so is happening? There's one important thing that you need to understand, guys. One important thing that you need to understand is that this plan has a debt and has an interest. You know what it is enjoying because of this? It is enjoying tax savings. If you compare the other plans, okay, you compare plan A, B, and C, what you will see, who is scuffing out minimum tax? Plan B is scuffing out minimum tax. How did this happen, sir? This happened because it initially paid interest, right? It initially paid interest expenditure. See, this is a typical businessman. People always say, no, they want to claim expenses. They want to claim expenses, right? Every businessman is running after what? Claiming expenses. Hey, you have some voucher, give it to me. I'll write in my business. Make any small payment, create a voucher, get the person sign. What is the idea? Every businessman understands that I claim more and more and more expenses. What will happen? My taxable income will come down. And because my taxable income comes down, my interest amount, or sorry, my tax also comes down. That is a benefit of tax saving due to interest. Okay. And this will happen, no? This will happen throughout. You can see now a layman would say what? Sir, this fellow is paying 8,000. This fellow is also paying 8,000. So they are same, sir. No, friends. It's a position of payment that also matters. Correct? It's the position of the payment that matters. Plan B pays 8,000 before tax. So taxable income comes down. Tax comes down. Plan C pays 8,000 only, but in the form of preference dividend. When is that paid? From the post-tax profit. So did any saving happen in the taxation part? No. Understand? So in the given scenario, which plan will always dominate? Second, it will always dominate. See, plan A, see, all those people who always have thought equity is the best choice. Why, sir? Because the rate of dividend is not fixed. I've told this also. See, rate of dividend is not fixed. Means minimum promise or above that. Below that, not allowed. But you yourself see this throws a lot of light on your thinking and makes you think on your thinking. Why plan why plan A is suffering? No taxable expenditure. No taxable expenditure. Directly, what is happening from the EBIT? Directly, 40,000 rupees getting deducted as what? Tax. Understood what I said? You are able to judge what you are able to understand what I'm saying, right? Okay. So, see, guys, debt in a way is good. It cuts down your tax. You know what? Second thing, as I always say, once you issue equity, the denominator of your formula of EPS enhances. What is the formula for EPS? Payesh upon what? Number of equity shares. Once you issue equity shares, that number of equity shares in the denominator increase. Take a look at that also. No? Take a look at that also. In plan A, 10,000 shares. Plan B, 5,000. Plan C, 5,000. Why? You understand that? So whatever is, see why? So plan B is benefited both ways. Because it issued a debt, it got the benefit of tax expenses and the tax came down. Okay, and because it issued debt, the number of equity shares also got reduced down. You are understanding something? This analysis you are able to understand. Okay, so then even preferential plan C also has only 5,000 equity shares, sir. Why it did not prove to be better? Because of interest expenditure and the preference dividend. Plan C also has now lower number of equity shares, 5,000 only. But why it is not better? Because it doesn't have interest tax, it doesn't have any taxable expenditure. So there is no tax benefit. Understood who's dominant in all the three plans, right? So let's write a little for it. Note down. Ah, this was the last line of this. Give me a moment. I have to create a file now. What is this question? At the given level of EBIT, since it enjoys Done, people? Hello? Have you written this? Have you understood this? Okay. See, guys, remember, because of this only, na, because of this only, there is no indifference point between B and C. Now, when you will see, this is like a demand supply curve. You plot, no? X-axis, Y-axis. Like that, you have to plot EBIT, EPS. You know what is going to happen? They are going to run parallel. Their curves will run parallel. So it will be always what will happen? Always B would be better than C. Because of what? Because of that tax savings. Understood what I said? Right? So because of this reason only what? Plan B is superior. Are you clear to this discussion, guys? Everyone? Yeah? Okay. Fine. Then let's go ahead. I think earlier I had shown, no? The whole thing, solution part. Screenshot taking, people. In case you are left. Last time. Done. Proceed further. Next page. It is so much value. You don't message me, sir. 58%. So many minute details you keep looking at, right? Huh? Done, guys. Okay, so let us shift to the next question. As you already taken. Okay, no problem. Sure, fine. Let's start with that. Let's come to question number 6. Okay, people. Let's start. The existing capital structure of XYZ Limited is given to you. You remember in one question number 2 today itself. Okay, we had an existing capital, right? But that time it was only equity. Now it's an overall existing capital. So what is called? See, the existing capital includes so many things: equity, retained earnings, preference shares, debentures. This is a total existing capital employed, guys. Right? Now, this total comes to how much? This total comes to 1 crore. Correct? No? This total comes to how much? This total comes to 1 crore. Yes, Vishal. Okay. If I talk about the further bifurcation, 40 plus is 10 is equity. Equity shareholders funds. This is preference. So if I add all these, this will be proprietors fund or shareholders funds, just for your information. And this is debt. Okay. Anyways, total capital is 1 crore. existing rate of returns on capital is 12%. Guys, ROC, ROC is given how much? 12%. Now, what is the formula for ROC? EBIT upon capital employed, correct? So yes, this will help you to tell you the existing EBIT. Okay. And income tax rate is how much? 50%. Okay. Company requires a sum of how much? 25 lakh. Guys, understand that. Existing is 1 crore, correct? Whenever it will borrow this, whenever it will arrange, let me say not borrow, whenever it will arrange this 25 lakh, the new capital employed would be 1 crore 25 lakh. Understand that? Right? See, whichever source, sir, but if it borrows from debt, if it borrows from equity, if it borrows from preferential, whatever, man, it will ultimately get added to the capital employed only. Whichever source it comes, 25 lakh, whichever source it comes. If it is debt, it will get added to debt. If it is equity, it will get added to equity. But then ultimately what? It will get added to the capital employed, right? So, to finance this expansion program for which it is considering the following alternatives. Issue of 20,000 our favorite, premium. What is the face value? See here, of rupees 100 each. This is known as face value. Correct, people? This 100 rupees is what? This is known as face value. Come on. Premium 25. Issue price. Very important question once again. Super. Everybody is saying 125. Very good. Very good. Then the second option is what? Issue 10% preference shares. Issue 8% debentures. Okay. Now see, students, something really very important now, guys. Something really very important. See, this is coming up for the first time. This is coming up for the first time. What are you told? See, you are told that it is estimated that the price earning ratio in case of equity, preference, and debenture financing would be 20, 17, and 60. This is for the first time we encounter this PE ratio, price earning ratio. You know the formula for price earning ratio? What is that? Price upon earning. Price means which price? Market price. Earning means which earning? EPS, correct. So what is the formula? MPS upon EPS. Simple. True that, friends? Right? Okay. So you know what is going to happen? Normally, like every time we make an income statement, at the end of the income statement, we get EPS. EPS is equal to something. You know what? I know that PE ratio is MPS upon EPS. So if I yes, MPS upon EPS, correct people. Thank you for so many people writing the ratios. People remember. Yeah, find MPS, correct. Correct. I was coming to that. So if I know the PE, if I know the EPS, can I calculate MPS? Yes, people. You remember, I've been always saying that what is our ultimate aim of the finance managers to increase the wealth. Wealth means what we have to increase? We have to increase the market price. Remember that? Okay. You don't provide me any other details in the question. I say, okay, fine. Everything remains same. MPS increases when EPS increases. So we were selecting on the basis of EPS. Now, P ratio is given. Na? So can we calculate MPS? Yes, we can calculate MPS. If we can calculate MPS, then what? We'll take the decision on the basis of EPS or on the basis of MPS. MPS, correct? If possible to calculate MPS, why not? We'll take it on the basis of what? We'll take it on the basis of MPS. Did everyone understand this? Okay, fine. Let's start with this then. Yes, okay. We can find MPS, correct people, correct. Let's solve, that time we will rediscuss, okay. First, let's make the financial plan. Look at the time, 9:06. Guys, you have got what? 24 into 60. 1440 seconds. Okay. 2 seconds got wasted in showing this. So let's start. Solution to question 6. Okay. So guys, first part, make a note that existing capital is there, right? Okay. Okay, so we'll write financing plans as usual, sir. We are used to that. Okay, no problem. Let's write financing plans. Okay. We've got 1, 2, and 3. 1, 2, 3. What happens in the first plan, guys? It's all issue of equity shares only. All 25 lakh. Okay. What happens in second plan? %, preferential capital, all 25 lakh. What happens in third plan? 8% debentures, 25 lakh. Correct, people. So in any case, total capital new would be 25 lakh only, because that's what we have to raise, no people. Correct. Now, just a minute. So now let's write number of equity shares. Guys, first we'll have to consider the existing one also, correct? How many existing shares? 40,000. This 40,000 shares will come in all plans, now whichever way you raise. What say, guys? 40,000 you got, right? Now total capital is how much? 40 lakh. Equity shares of rupees 100. So 40,000 shares we are getting. Correct? Okay, fine. Now new. I think new will come only in the first plan, right? How we will calculate? What is a issue price? What we discussed? It's a 100 rupee share, sir. 25 rupees premium. So issue price would be 125. Correct, friends? I hope you mark this part. I think we wrote it here also. Issue price 125. Correct. So 25 lakh rupees we want divided by 125. It comes to 20,000 shares. Nil over here, nil over here, because we are issuing preference and debentures. So final number of equity shares would be 60,000, 40,000, 40. Now you say, come on, sir, let's make income statement and solve. Array, but my dear students, listen, small points, listen. If you start with income statement now, where is the EBIT? Getting it? Where is the EBIT? EBIT is directly given, like last question, EBIT 80,000. Take 80,000, solve. Is it given? No. You know, that's what they have done. They have given the ROC. What was the ROC up to last project? 12%. What is the rate of returns on capital employed? 12%. Given in the very first line, see, below the existing capital structure. 12%. Correct? Yeah, true that. Now listen. We will have to assume. Okay, is question saying anything that the efficiency increases instead of 12%, it starts making 13%, 14%, 15%. Nothing like that is said. So what you will assume that ROC remains same. Correct? In the absence of information, the ROC remains same. So important. Like, I'm not done yet. Listen, you will calculate 12% of what then? The new capital employed. Ah, existing. I see. That's why I go on making boxes. The existing capital employed I showed as how much? 1 crore. The new capital employed will be how much? 25 lakhs. Sir, which source it will come? Whichever source it will come, ultimately the capital employed will increase, would become 1 crore 25 lakh. So what will be our new EBIT? Our new EBIT would be 12% of the new capital employed. Got it? So I'm writing these points. Pay attention. New capital employed is equal to 1 crore. What is this 1 crore? Existing plus 25 lakh. That is the addition. This will become 1 crore 25 lakh. Correct? Okay. Existing returns on capital employed is 12%. Correct? Existing returns on capital employed is how much? 12%. We assume that ROC on new capital employed will be same at 12% since question does not specify any change in ROC, right? Is question saying anything like this, that the efficiency is going to increase, ROC is going to change from 12% to 13 to 14? Nothing is told. So you can safely say, okay, sir, if it is not going to change, so let it be 12% only. Okay, so now you have new capital employed 1 crore 25 lakhs, and you have new ROC or the existing ROC, whatever, 12%. So can I find the new or expected EBIT? Yes, 12% of 1 crore 25 lakh, right? Therefore, expected EBIT will 12% of new capital employed. That is 12% of 1 crore 25 lakh. 15 lakh. Got this now? Okay, good. Now go ahead. And what you're supposed to do, you have to calculate which one to be selected. So what is the first thing that you will do? Income statement. We'll make an income statement. Go with the income statement. Go up to EPS. Whatever EPS comes, multiplied by P ratio to arrive at MPS. So EBIT over here, less interest. I'm just writing the basic things. Yes, I'm looking at the time. I understand you have one more lecture. Uh, write only the required things. Interest existing at the rate of 7% of 25 lakh, and new at the rate of 8% of 25 lakh. Okay. If you have not done this, you need to change your answer, right? New plans come, correct. Existing plans don't die. So that means this interest will come in all three places. New plan, yes. New plan is only plan 3 showing debentures, right? Now 8% debentures. So new plans expenditure will come only over here. Right? This is what you need to understand, guys. If you have not done this, then you will have to change your answer. Less tax. Tax rate is how much? 50%. Okay. So again, you will get EAT or what? NP 80. Okay. Less what? Preference dividend. Again, guys, you need to understand. Go through the existing capital. Existing is preference capital is there now. 9%. So at the rate of 9% of how much? 25 lakh. Again, the same thing I would tell you. This amount will come here, here, and here, all three places. Okay. New preference capital is there. Yes. 10% of how much? 25 lakh. But you need to check where you issue new equity shares. New equity shares are only issued in plan 2. New preference shares, sorry. New preference shares are only issued in where? Plan 2. So this will come only in plan 2, right? Then you will take totals. Then you will get uh, profits available for equity shareholder, right? Then you will calculate EPS as what? Profits available divided by number of equity shares. So whatever values you get over here, you will multiply it by PE to arrive at what? Arrive at MPS. Okay. And this final values of MPS would be the deciding factors. Not every time I should fill up, no? First you can fill up, no? I've given you the whole skeleton. Now you just have to write the numbers. MPS is 145.83, 79.69, and 135. People getting these values? Hello guys, I hope you have taken the existing numbers into consideration. Yes or no? Should we take or we should not take? We should take now. Why? Hey, you start a new business, you add something new. The old people will die now. Go and die. Doesn't matter. You contributed money in the old times now. Go to hell. Is it like that? Think like a businessman, yaar. Come on, think like. Suppose you are a debenture holder in a company, and then the company issues new debenture, and then company tells you, "I'll stop paying you interest." Well, what is this? Because you issue new debenture, you not pay interest to me. That's not fair, na? Just a common sense application, guys. You just expand your business. So old debenture holder and preference shareholders, whomsoever are they going to leave the business? Can you just leave them like that? People, complete this and we will discuss tomorrow. Final answers. I keep my sheet ready tomorrow. Okay. You can take your much deserved break now. Thank you, sir. Yes, sir. Photograph. Kunal is always there. Thank you, sir. Arey, it's a blank thing, man. What would you do taking photograph of this? Bye, bye, bye. Take your break, guys. And if you have a doubt, then ask. Otherwise, take your break and get ready for the next class. Bye, bye, people. Bye. Anybody needs question two, solution is here. Thank you, Mohit. Abhinash, what is this rate? 2229.2. This is your salary or what? Stipend. I think you people solve will cross check tomorrow. Bye everyone. Chalo, I stop the meeting. Huh? Shweta, solve and then we will discuss tomorrow. You just have to fill in the blanks now, people. I've given the whole format. Huh? Solve, we'll check tomorrow. Bye. I'm ending the meeting. Final. Bye.